Okay, today we're going to talk about Docusign and why is ARK Invest selling shares after the stock dropped huge when ARK was a big holder of this company. So if we look back here, we can see this is an email from December 3rd. Okay, December 3rd, about a month ago. Docusign was a big position for ARK. Okay, they bought 461,000 shares of Docusign. This is on December 3rd. This is the day that Docusign dropped. Okay, if we look here, we can see it went from $233 to $130, and they bought that day. Okay, but then if we look at another email from December 27th, okay, a couple of weeks later, we can see that since then they have been selling Docusign shares. So here is, they sold 10,000 shares of Docusign. And if for the past couple of weeks, they've been selling Docusign almost every single day. Here is a graph showing the yellow is the share price of Docusign. The purple is the amount of shares ARK held. So at the peak, this was in last April, they held 3.3 million shares. And that was when the stock was $230 they were buying it at. Then if we keep going, we can see they kept selling their shares, and on the day that the stock dropped, they were carrying almost half the amount of shares. They're at 1.6 million shares. Then they bought that first week, and now look at, now they're down to only 200,000 shares. So they've sold the majority of their position. And if you're wondering why the stock dropped, the only thing that changed was their Docusign's guidance for this quarter, for Q4 2021. It went down a little bit. They were supposed to do, they were at first expecting $275 million, and they lowered it to like $265 million. That's all that changed. Everything was still intact. Their subscription numbers were up 34% or something like that. Everything was still looking good. Okay, so if we look at what this company has done in the past, this year they're expected to grow revenues 43%. Next year they're expected to grow 25%. A year ago they did 1.4 billion in sales. This year they're going to do about 2.1, and then next year they're expected to do about 2.6. So this is a fast growing company. Okay, EPS of less than $1 a year ago. Now they're expected to do $2 this year, and then $2.1 next year. So this is a fast growing company. Then we look at this. A week after the same week the stock dropped, Docusign's CEO buys $4.8 million worth of the shares, right around that $145 mark. Okay, and this was the same week I bought some shares too. I bought 18 shares at $144, because this one looks like easy money to me. If you go to the past, you can see that when it was trading at $300 a share, the price to sales was anywhere from a 28 to a 34. That is insanely high. I would not pay that premium for this stock. But now that it's trading at a price to sales of 14, that is a deal. A forward PE of 60 compared to it was trading at a 200 at this time last year. That is a huge drop in the share price. And look at the 5-year chart of this one. This company has been trading above $130 for the past, almost 2 years now. It hasn't been these prices since May of 2020. So this one is, let's look at this. Here's the next thing. This is showing you all the companies that compete in this space. Okay, Docusign, they're the leader in e-signatures. Okay, they are number one in this space with over 1.1 million customers. Okay, they have over 1 million paying customers. In second place is HelloSign. HelloSign is owned by Dropbox. Okay, Dropbox bought them out a couple years ago. HelloSign is in second place. Okay, just think about this. HelloSign, here's HelloSign's website. They have 80,000 customers only. Okay, so Docusign has at least 11 times more customers than their second competitor. Okay, we also know that this industry of signing documents through online is not going away. Okay, it's cheaper, it's faster, it's more efficient, and it helps businesses get things done in a quicker amount of time. Okay, so that's not going anywhere. They're not going to return things back to everything in paper. That's not going to happen. Now, yes, as with a lot of companies like this, where some demand got pulled in from the future because of the pandemic, because everything got rushed to doing it online and not in person. So yes, that is true. And that pulled some demand maybe from, next year or whatever. That does not change anything as far as the long-term 5-year plan, the 10-year plan. This is going to keep growing. And it looks like easy money to me. They are the #1 player in this industry. They have 11 times more customers than their they're the competitor in second place. And the stock is down, what, over 50%, 60% from its highs. Yeah, over 60%. So this does not make any sense. Why is ARK Invest selling their shares when they were buying it when the stock price was double what it was today? And all that's changed is they lowered their guidance for Q4 by a couple percentage points. Everything long-term still stays intact. So this does not make any sense to me. The CEO bought $5 million worth. It does not make any sense. So in my opinion, Docusign is at an excellent value here. Definitely consider this a buy. I think this is easy money. And within a year or two, I think it's going to be back at this $250, $260 range. So yeah, not sure what's going on here. But when this whole market crash thing ends that we've been in the last couple of weeks, I think this is going to have a huge recovery to it. And within a year or two, I think it's going to be about double what it is now. And yes, that's all for Docusign. Thank you very much.